Hi guys, welcome to Frontman Learning School. And today we're going to learn about understanding gold as an asset. Before we understand gold as an asset, let me tell you a quick fact sheet about gold. The total gold in world is believed to be of 1.9 lakh tons. Yes, 1.9 lakh tons. But believe me, if I would put all this gold, melt that gold and put it in front of you, you would be able to see it with both of your eyes. Because that would be a 20-meter cube. Now coming to India's share in this total world gold, it is 13.5%. 13.5% is India's share in the total world gold. Now companies like gold holdings of Muthoot Finance, Manappuram Finance and Muthoot FinCorp form a staggering 47% of India's gold share. So you can imagine the amount of gold that these big corporations or companies are holding. Now coming to the pros and cons of gold, pros include gold being it is safe, it is risk-free, it is liquid in nature, and then gold is scarce as well. So that these are some of the advantages of gold. But whereas on the flip side, gold has security expenses, it has no use. No use when I'm saying I'll try to explain it in further in the video. And then generally, I'm only saying it on a general term. Generally, gold is looked at as asset of underdeveloped people. Now in India, 75% of gold, that is the reason why it is now stuck in rural areas. Now why do you think gold started off as a value instrument in the olden days? And when I say in the olden days, it dates back to almost 5,000 years. Because number one, gold was looking beautiful. That's why we are attracted to it. And number two, gold was not reactive with anything. And then number three, gold was easy to manage. And number four, and the most important of all, gold was rare on earth. The scarcity of gold is what it makes important. Then comes in 1971 the agreement that was signed at Bretton Woods, which was called Bretton Woods Agreement, which gave the power to US dollar. When the US dollar was established as an independent currency without the backup of gold, which was the procedure which was followed before this agreement. Like the amount of gold that I had, that much currency that I could hold. But 1971 Bretton Woods Agreement changed this all. Now all countries started backing up this US dollar as their currency, and that is why if you see today, in today's scenario, whenever there is a shift in US markets, that is being felt all over the world markets. And that is why if US markets do good, Indian markets do well. And US markets tank, and then you see a red graph across the Indian markets. That is the reason. Now do you think gold is an asset or a liability? Funnily, it is neither. Yes, I may sound very surprising to you, but funnily, yes, gold is neither. It is only a commodity. It is only a currency. Therefore, I say use gold as a hedge investment and not as a secured investment like all other asset classes out there. Now let me compare gold with equity. When you compare gold with US dollar, it is only 4%. And when you compare the Indian rupee with gold, it is 9%. So does it mean your Indian rupee is more powerful than US dollar? No, it means that the Indian rupee is getting devalued by the day because gold will never appreciate. So what do you think? When do you think gold prices shoot up? There are four major reasons for this shooting up of gold prices. Number one, when there is uncertainty, that is the currency getting devalued. Number two, when there is downtrend in the bank interest. Number three, when there is gold demand, when there is demand for golden jewelry, that is gold jewelry that we see and that we use as accessories. And number four, when there is high inflation. At last, let me tell you four most major important points or four most important ways of investing in gold. Number one, investing in physical gold. Investing in physical gold comes with a lot of problem, guys. Number one, it has the purity problem, and then you have got the security problem, and then there is this insurance for the safety of gold, and a lot of additional problems that keep on coming with having a physical gold in your asset. Number two, most important, it is exchange traded funds. ETFs. To put it in very simple terms, ETFs is nothing but price into quantity. So I have some amount of gold which I divide it into price and quantity. I tag along some price towards quantity of gold and then I sell it. And as far as I'm concerned, that is the best instrument to invest in gold in today's market. That is one of the best ways of investing in gold in today's scenario. Number 3, you've got gold bonds. When I say gold bonds, sovereign gold bonds, these are the bonds backed up by the Reserve Bank of India. The biggest advantage for sovereign gold bonds is that they have dividends, and dividends can act as additional income to you. And number 4, that is jewelry. Now guys, let me tell you, investing in jewelry, buying jewelry is not an investment at all. It is only an accessory. Let me repeat, buying jewelry is not an investment, it is only an accessory. At last, let me tell you, diversification is important and therefore investing in gold is essential. A 5% or even 10% of your portfolio must be invested in gold. But invest in gold wisely. And 2 most important points that I want to dwell upon here is that do not trade in gold. Do not start buying gold when there is a high rush or high demand for gold just in front of a festival when everyone is rushing around. That is not the way to do it. The ideal way of investing in gold is now. The ideal way to invest in gold is investing in bonds, investing in ETFs. Hope you have learned a new thing today. Stay awesome. Signing off.